Good morning and welcome to David's Grant. I'm Nick, the marketing manager here, and I'm joined today by David Richardson, who is one of the senior managers here, and we're going to have a little chat about some things that might interest you as business owners. Morning, David.
Morning, Nick.
How you doing?
Not too bad,
Cool.
too bad.
So I wanted to ask you about your clients and your experience, because I think it's really interesting that you have that day-to-day interaction with people and sharing that knowledge both with me and with the other clients and anyone else who might be interested. So I wanted to start with a question about how often you see your clients and how often they want to see you and how often you want to see them.
Sure. So I actually see my clients more than most of the other managers. I do a lot of face-to-face meetings with clients. I'm always on the phone with my clients.
Mm-hmm.
I personally think that's very important. With clients these days, the question is, where's the value in what we do? With all the different softwares we've got, the compliance work is more day-to-day, it's basics. Where the value in the client is actually providing business advice.
Mm-hmm.
And the question is, how does a client appreciate the advice that we give? So how do we deliver that advice?
Mm-hmm.
Fundamentally, it boils down to, does a client see us anything other than compliance work?
Right.
So do they just come to us?
Just to decode that, just because obviously it's important for me and anyone viewing the video to understand. The compliance work, you mean, is stuff like...
Yeah, so it's the year-end accounts. Okay, so fundamentally, every year, every company's got to submit accounts to Companies House. It's got to do a corporation tax return,
Mm-hmm.
and it's got to submit to confirmation statement to Companies House.
Right.
They're the three core areas of compliance. If they're VAT registered, they may have other compliance, VAT returns. PAYE registered, they may have PAYE submissions to do. But outside of that, gone are the days where you'd only see your client once a year.
Right.
To do that piece.
Right.
And the reason being is because information now has changed. So with the likes of Xero, we can have instant access to data, which means as an accountant, I'm not just sitting back and going, I wonder what they're doing. I can see myself live,
Mm-hmm.
exactly what's going on.
So that's like the minimum that someone wants to get out of an accountant is they want to make sure, as a limited company, I'm guessing,
Yes,
right?
yes.
They want to make sure their accounts are filed with Companies House, and they want to make sure that their corporation tax return is done.
Correct.
And I guess there's personal tax returns a lot of the time as well.
Yeah.
And especially if you don't have a limited company, you're a sole trader, it's all under self-assessment, isn't it, which we help people with.
Now, the interesting point of that is actually the lag. Okay, so your year-end date, so say for example I've got a 31st of March year-end, my accounts don't actually have to be filed until the end of December, which means I've got a 9-month window of getting the work done. But actually as a compliance piece, could I get that work done on the 1st of April? Yes. Could I get it done on the 31st of December? Yes. But there's a long time in between there where actually you've nearly done a whole new year. And what we're trying to get out of our clients now is trying to give the value during the year, rather than saying at the end of it, this is what you've done. You know, it is very much this is what you could have won type scenario. Had you done something differently.
Right.
And one thing that I guess with accountants, you've always got the benefit of hindsight.
Yeah.
So with an accountant, I can always say, if you've done this differently, your profit would have gone up. Well, it's easy to see that because I've got it black and white on paper. Where we're trying to go with it is an advisory service where during the year we can say to our clients, actually, if you do this differently, this is the end result. This is what it could be.
So the extreme example is I've got a limited company, I got a year end which is set by when I establish the company, is it usually?
Initially,
right.
But you can change it.
And then you've got a 9-month window to submit your accounts,
yes.
which are used to determine how much corporation tax you need to pay.
Correct.
Right?
Yeah.
So on an extreme example, I'm talking to my accountant in month 8 of that period, and we've got a month to pull everything together. We've got to get records from 7-8 months ago all together to give a full picture.
Yeah.
And that's kind of the pure compliance bit of being an accountant. But what you're saying is that's not how, in an ideal world, you'd like it to be.
No, because in an ideal world, say for example a client's got stock. Well, actually, the only date I really know what stock I've got on the 31st of March is the 31st of March. If I ask you that 8 months down the line, it's very difficult to backtrack. And that's where there's the conflict between, I don't want to get bugged by my accountant.
Yeah.
Actually, if you did it as you went along, and the advisory service was being proactive, you get better results because I get more accurate figures. 2, it means going forward, I can actually say, you know what, this is your tax bill. It's due in 9 months' time. I can start doing cash flow planning.
Right.
And I think for me, the reason, when we took the original question of how often should you speak to your accountant, I think the reason people don't speak to their accountants is because they don't want to know how much tax they got to pay.
Right.
Fundamentally.
No, I can understand.
They want to push the can down the road.
Mm-hmm.
They want to kick it down the road.
Yeah, they want to pay. They want to not think about the tax or delay until when it needs to get paid.
Actually, if you speak to us early, we could look at minimising the tax, or actually coming up with a solution for cash flow. Say for example, you can't afford to pay it, to look at payment options for HMRC.
So by having either the more regular conversations or by making sure you're on it, like pre your year end, and when your year ends, having that discussion with your accountant, obviously, how do you counteract with clients that perception of, well, I don't want to have the conversation because I don't want to think about the tax again?
So with myself, again, as I spend a lot with my clients, I almost push myself into that role. The way I do that is basically just having a conversation about their current problems.
Right.
And then if I know what's going on with their current problems, I can have a meeting with them and deal with it. And actually, it's a trust issue. Okay, so a client needs to understand what you can do to trust you to deliver it.
Mm-hmm.
So once you've had the conversation on what's going on in the current situation, once you've overcome that, it breaks down a huge barrier.
Right.
So once you've broken down the barriers, they then value you as a member of their team.
Mm-hmm. Okay.
So traditionally with an accountant, accountants are not known for running businesses.
Right.
They're known for providing support services.
Mm-hmm. So
the question is, if I run any kind of operational business, what can I add to the operation? Mm-hmm. And the answer is, I'm not trying to add to the operational department. I'm not going to turn around and go into your warehouse and start packing boxes. I'm not going to, design a new product.
Yeah.
Actually, I'm financial support. So in the same way as especially SME companies, if I own my own business, I have to do every function. I have to do my operations, I have to do the marketing. And actually, what they can delegate, and it is a delegation to some extent, is the financial department to us.
Okay. So I'm a SME, small and medium enterprise business owner, and I'm working away. It's my business. I might have maybe, a couple of people that help me out, maybe not, maybe it's just me on my own running the business. What you're saying is that the accountant, rather than being the person you go to about tax or just about the compliance, is that they can help you?
Yeah, we can, especially again, we go back to the softwares and the technology available. We work with partners that can help with funding.
Right.
Okay, so you as an SME, you grow a business from nothing to a good sum of money. So you can support yourself, you can support your staff. Mm-hmm. You're taking a good sum of money. Mm-hmm. The question is, what can I do anything different? You've grown your business from nothing to something worth having.
Yeah.
What can I do to differentiate?
Yeah.
And actually, I can give you access to funding. Mm-hmm. I can give you access to cash flow forecasts. Right. I can give you access to predictions of what your sales could do.
Mm. And it sounds costly, though.
To be honest,
if I'm just playing devil's advocate for a minute, I'm aware that, and I'm saying I'm that small business owner, I've got to really keep a tight lid on my costs.
Yes.
Right? And so maybe my fear is, if I'm getting more from my accountant, that's more I have to pay. That's a costly professional that I'm going to have to pay. Maybe I can muddle through without it.
Yeah, but it's to do with the value of the service. Okay, so there's a huge argument, the value versus the cost. Okay, fundamentally, if it's a cost-based exercise, then your opportunities for growth may not necessarily be your priority.
Right.
Okay. If it's a value-based exercise, okay. So again, as we play devil's advocate, what I do as your accountant may not be fundamentally different to what you see yourself doing anyway.
Right.
Okay. The question is, how do you get there? How quickly? How efficiently?
Right.
And do you miss any opportunities in your speed versus our speed?
So the question becomes like, if I'm happy with the way things are going, how ambitious am I? If I need to grow, if I have other concerns, maybe I want to sell my business, maybe I need to, my sons are coming through the business and I want to pass it down to him and I want to work out how to do that. That's when you can have more of a conversation with your accountant.
So going back to taking opportunities, okay, you got your business. The question is, I want to double my business in the next 3 years.
Right.
Okay. You may have a system to do that, but actually, if we had a few tweaks, done things differently, and we could potentially double the business in 18 months. If the business is a certain size in 18 months, you might create different opportunities to if it had been that size in 3 years.
Okay. That's really interesting. Really interesting. I think maybe that's all the time we've got right now. Thank you very much. I'm sure we'll have more interesting conversations. If anyone has any questions, please get in touch. I'm Nick at davisgrant.co.uk. David is David at davisgrant.co.uk. You can find us on social media as well. You on LinkedIn?
I'm indeed.
Right, you can find us on LinkedIn as well. And thank you very much for your time. See you soon. Thank you.